Hey guys, can you hear me?
Yeah.
Yeah, Scrub, we can hear you.
Awesome. Well, first and foremost, I appreciate you guys for taking some time out of your day to come listen. I hope you learned some stuff. Hope you had a great, fantastic morning. So today's lesson, we're going to be talking about psychological barriers revolving in trading and actual risk management. So just before we begin, I'm going to be doing these sessions probably at least once a week. So if you have any topic ideas, feel free to just send me a DM or anything like that, and I'll see if I can whip something up for you. So without further ado, I categorize most of the psychological barriers into 6 different criteria. So just quickly reading this screen, can you guys just write in the chat, have you experienced any of these situations in your trading? And if so, which is your top that you've experienced the most?
Definitely greed, I'd say. Greed and
Awesome.
revenge trading.
Getting some greed, some self-hatred. All right, awesome. All right, so we'll go ahead and go over them a little bit more in depth then. All right, so for greed, excess greed will be your utmost downfall as a trader, and it's something extraordinarily difficult to get out of your system entirely, since, as human beings, we are naturally greedy, right? But with practice, it's much more manageable and to identify and kind of manage itself, right? Because greed, let me kind of give an example. Greed is when you're up $100 and you should take profit, right? And it's coming to your resistance, it's coming to your profit target, and you should probably take some profit off the table. You should try to trim here. But in the back of your mind, you're thinking to yourself, just a little more, right? It'll go up, it'll go my way, just a little bit more. But you know what happens? Usually when that greed factor sets in, it ends up actually just reversing on you. And you had that $100, but now it's in $50, or maybe not even that. Maybe it's, negative, depending on how long you hold it for, right? So, but let me kind of ask you this quick question. So try to answer this one in the chat as well. So if I had $100, a fresh, crisp Benjamin waving right in your face right this second, asked you, do you want that? Would you take it? Absolutely. You would take that every single time. You would take that every day if someone gave you $100, right? So the exact same mentality applies with trading. That same $100 you had on your trading account is the exact same physical $100 bill. It might not feel real at the moment since it's virtually $100, but it's the exact same thing. $100 is still $100. So the next time you feel yourself being greedy, kind of just in the back of your mind, be like, oh, I'm just going to picture Scrub, shoving $100 in my face, or I'm going to picture one of my loved ones shoving $100 in my face, be like, hey, you greedy asshole, do you want this money? Then it'll kind of, snap you back into reality, and you'll be able to start taking profits a little bit more easier and kind of identify that you're being greedy, right? So also, don't scoff at the profits that you're getting, handed to. So like the market right here, the tip, the market doesn't owe you anything. It's not just going to give you profits. Like if you're able to get $100 for that specific day, that's fantastic. Congrats, right? Just take it and run, compound it, and come back the next day and consistently do that. And you're able to make a fair bit of passive money on the side, right? You're able to generate a good bit of monthly income from, in a sense, sitting on your butt in the computer and, comfortability, just clicking some buttons on a computer, right? So kind of just keep that in mind the next time you get greedy. So that's my spiel on greed. So the next one, let's talk about some fear. A lot of new traders go over this and experience this, and even some, experienced traders have they have fear, right? So a situation with that would be, usually it happens after a loss or even before a loss in some cases. Usually fear settles in and you know what you're doing, right? You've charted, you've done your due diligence, but in the moment that you're supposed to, take action, you freeze. Or you don't even enter the trade, and later on you kind of review it and you see that the trade that you're going to take actually plays out in your favor and it hit like you thought it would. So, okay, why didn't you pull the trigger? You didn't pull the trigger primarily for probably two reasons. The first one is you are afraid of losing your hard-earned capital, which is extraordinarily respectable. Or the second reason is you are traumatized by a previous loss that you had because you potentially went too heavy for your account size and just got plain burnt to a crisp, right? So you lost a lot of money very quickly. So you're still in that mentality, oh, if I take this trade, what if I lose again, right? Also very respectable. But the silver lining is, try to write this down, try to, just memorize this. You cannot make money if you are in fear the entire time. Let me repeat myself. You cannot make money if you are in fear the entire time, right? You are too fearful of losing money, but forget to realize you're supposed to use money to create extra money for yourself. So you want to let your money work for you as kind of like little soldiers, right? They want to send them out and kind of come back with more. So to get out of this funk, try to reset after a trading loss, right? Try to either just come back at the end of the day, come back tomorrow, take a couple of days off, take a week off, take a month off. It does not matter. Take as long as you need to. Just re-strategize, reflect on yourself, see what you did wrong, try to journal about it, and then come back stronger the next time with a much clearer headspace. We're not going to be revenge trading. We'll talk about that in a little bit, but you don't want to revenge trade, or it's basically just kind of like a rabbit hole and you're going to lose even more money, right? So kind of keep that in mind. So another thing, it could just be a simple fix. Like the thing that you could be reflecting on is potentially you're just sizing in way too heavy and you're just being really aggressive, right? If you kind of identify that, then the next time you trade, just size down and just be more passive, right? And it's okay to just open one contract. You don't have to be opening like 5 or 10. Just kind of get back into the groove and then get your confidence back, right? No need to rush the process. Another thing is, for the love of God, do not risk money that you're uncomfortable with losing, right? So example, if you have a rent payment due next week, don't use that on a trade, right? Like that's horrible, because if you lose that money, you're going to be screwed, right? You must be comfortable knowing that there is a possibility that the money you are risking, you will not see again. And you have to be okay with it and aware that the market, like I've said before, does not owe you anything. It does not. It's designed to make you lose, in fact, actually, right? But it's our job to use different strategies as retail traders and have a leg up on other traders in the market and have them lose instead of us. There will always be a winner and a loser in the stock market. As long as we are in the winning side more often than not, then that's perfect. So that is greed and fear summed up, right? So next we're going to do self-hatred. A lot of people experience this one as well. So I get it. We've all been there. We've had a bagger in our hands and we let it slip due to, just sheer greed and just stubbornness, right? And it turned into a major loss extremely quickly. It is detrimental to one's mental state sometimes, but the important part is that as long as you understand what you did wrong and you already feel kind of, horrible about that, now you know exactly what not to do again. You won't do that again, because if in the back of your mind, if you do that same exact situation again, it could be potentially worse this time, right? So, I'll give you a personal example for myself. When I first started trading, I had this mentality of, let me kind of just map out the trade for you. I was up about $1,800 very, very quickly on a small account in one day. And I decided, you know what, I'm just going to swing this. I'll be up a nice $2,000 in the morning. I'm going to, cut in the morning. Guess what happened? The market tanked overnight and my quick, huge gain turned into a $700 loss. and I was really upset with myself. And I basically just had, the self-hatred mode for a couple days, and it wasn't pretty, right? So it might seem silly to say this, but if you feel yourself getting into that mode, please take a step back and try to reflect. Don't take it out on others, because sometimes unconsciously, if you have like a really piss poor day or a really bad trading week, you can unconsciously take that out on your loved ones. So just kind of keep that in mind, because sometimes it's not, obviously it's not your loved one's fault, but we could potentially project onto them. So, definitely keep that in mind. So that's why meditating daily and occupying your mind with something other than charts or trading, or even thinking about a loss, is very beneficial to us as traders. We can get burnt out extraordinarily quickly, um, especially if we don't take care of our minds and bodies. Another thing, since a lot of you guys are new in here, please don't forget to eat and drink water. Very silly advice, but you'd be surprised the amount of traders that I know that literally sit at their computer desk from open to close every single day with barely getting up and barely eating. So kind of just keep that in mind as well. You want to be taking care of yourself, because if you don't take care of yourself, you're going to get burnt out, and if you kind of just a snowball effect, and it's going to snowball into your trading, and your trading is going to suffer even more. So that's self-hatred in a nutshell. Next one, giving up. So I'm sure you've seen the statistic a lot that, a lot of retail traders fail within the first year or two. Traders often give up extremely, extremely quickly after a few losses, or if it just, doesn't click right away in the first few weeks, first few months. But you can't really expect to come into a completely different world, like the finance world, then you're not used to it. You can't just own it because you're not used to it. So there are some very rare instances, sure, but more times than not, you have to put the work in and you have to stay the course, because losses happen, right? Being able to handle a loss is key to staying in the game for the long run. If someone on social media told you that they have 100% win ratio, that is a person you want to block and stay super far away from, because sorry to tell you, there's even hedge funds. No one has 100% win ratio. You're not going to ever, you will take losses. You have to be okay with that, right? So you have to study and put in the work to reap the rewards. But let me tell you, when you finally grasp it, no one, no one at all can ever take that away from you. The fact that you yourself just learned a new way to create an income, whether it be passively or actively, that in itself is a kudos. So don't give up, right? It takes some people years to fully get this down. So kind of an example that I like to give, a well-known YouTuber that I follow and watch for a while. He started from a very, very small account a couple of years ago. I'm talking like $50, a couple $100. Like, he blew his accounts over and over and over and over again. He was very transparent about it. He's like, yeah, guys, I probably blew like 30 accounts. Like, I had no idea what the hell I was doing for the first 2 years. Just tried everything I could do, basically blew all this money, right? And then finally, he started picking up the third year of what he's good at, all the strategies that he's good at, all that stuff. He started, getting consistency, right? So he stayed true and he didn't quit. So now fast forward about 6 or 7 years later, this man that started from a very small account, $50, couple $100, he is now a multimillionaire, right? So moral of the story, do not quit. It might be hard right now, it might suck right now, but at the end of the road, it'll be worth it. So just don't quit on yourself. It's honestly disrespectful to you if you quit halfway through. Revenge trading. Write this down, circle it, put it in front of you, whatever the hell you want to do. Revenge trading is very bad, and I will not revenge trade. Revenge trading is very bad, and I will not revenge trade. Put it in front of you every single day before you go to trade. I promise you, revenge trading is terrible. You do not want to do this. It is detrimental for yourself, your mental self, your account. It's horrible, right? So let me give you an example. Say you just took a loss in a trade, right? Even if it was just a small loss, you cannot get over that. Your ego can't get over it. And you think to yourself, well, I'll just put in another trade right now. No big deal. Make that money back, no problem. Wrong. You're revenge trading and your mind is cloudy. Your decision making isn't the best in that specific state of mind. Oftentimes, you just end up losing more money and getting into a worse, bigger hole when you could have just simply walked away for a few hours to cool off, collect yourself, and come back later on in that day, or just simply wait till tomorrow, right? So if you feel yourself having just a very cloudy mindset and just being emotional after a specific trade, just get up for a couple minutes, try to cool off, and then potentially take on a different trade. Don't just, okay, I just lost this trade 30 seconds ago. Let me jump into something else, because usually you're not really thinking correctly. You're just thinking about potentially getting that money back. So that's kind of revenge trading in a nutshell. But please, it's very, very serious. This is pretty much how you will blow your account very often, is revenge trading. So feel free to drop it, write it down, circle it, whatever you got to do. But this is something you want to be very mindful of. Last one is arrogance. So picture this one. You are on a 7-trade winning streak. You feel on top of the world. You feel invincible, right? No one's going to stop me. I'm on a massive hot streak. So you get so overconfident with yourself, you decide to size up a lot more than you should have because, well, why not? I'll just get another win, right? Wrong. Sheer arrogance will cost you a ton of money. It's pretty much one thing to size up accordingly and suffer a loss. It's an entirely different ball game when you decide to play with a size you cannot afford to lose, right? So let's just say your usual contracts. You like to buy 2 contracts at once, right? So you were feeling super, super confident in this specific situation. And you're like, you know what? I'm just going to skip all the other things in between. I'm going to open 10 contracts, right? So you're not used to this down draw. You are not used to seeing this P&L, significantly more red from 10 contracts versus 2 contracts, right? So you emotionally see this in your mind. You're like, holy crap, I'm not used to seeing down a couple hundreds of dollars or a couple thousands of dollars. And then you could potentially emotionally trade that and not really, stay the course of that specific trade, and then either sell too early or just kind of bag hold more than you need to and just lose even more money, right? So you don't want to just size up super heavily. You want to kind of do it in gradual amounts, because it's perfectly okay to size up. But going from 2 contracts to 10 contracts when you're not used to it is really, really bad, right? If anything, kind of just gradually size up to maybe like 2 to like 4, then like 5, kind of get used to seeing the fluctuations in the account, and then go from like 5 to 7 to 10, right? Don't leapfrog from 2 to 10, because you're not going to be used to it, right? So, and also if you're wrong on that trade and you lose with 10 contracts with a size, pretty much you just pissed away worth, all those 7 trades that you were just on the winning streak. That one loss right there, that arrogance, literally just cost you all of those profits. So you just wasted all of those profits and all of the hard work that you just did from one arrogant trade, right? So to kind of stay humble, recognize when you're experiencing this feeling, step back and just realize that, hey, I'm being super arrogant right now. Let me just not do this. Let me size down a little bit, right? Do you guys have any questions whatsoever about the deadly sins of trading, the 6 barriers of psychological barriers? Anything at all before we want to continue here? Awesome. So please just kind of keep this in mind the next time you trade, that if you experience one of these things more often than not, these are the things that you want to focus on the most of. Not just because, oh, I know I'm just super greedy. That's just okay. Like, no, that's not okay. You have to actively fix this and work on it, or you're not going to be a very successful trader. Because sure, you could have, just to go back to the exact same scenario, you can have 10 trades in a row, but if you don't fix your emotional aspect, that one arrogant trade that you take can literally just blow an entire month of progress, right? So you really want to, like, most people will try to tell you that trading is charts and just analysis. It's not. It's literally your mind. You're literally fighting against your mind every single day. So you have to overcome these aspects to kind of step up into a next level of trading. So we'll get into risk management now. Actually, first, let me take one step back. We'll talk about how to take a loss, right? So a lot of new traders their ego cannot allow them to take a loss. So I'm going to try to reframe the thinking for you guys. So most times I see in the chat, oh, I should have did this. Oh, I could have did this. Oh, I would, all these, hindsight things. 3 simple words that can mess up your entire day and your trading mentality. I should have taken profit here. I could have cut here. I would have done this. Well, you didn't, right? You didn't. You have to just realize that you did not do that. Stop dwelling on it, journal about it, back test on it. And then next time when you get that exact same setup and situation happen, you will know that you already experienced this, so you can do something better, right? So this time, and focus on I shall, I can, and I will. It sounds better. It's like, I can make more next time. I will make more next time. I shall take profit here. I shall cut here. Don't think about the past. Learn from it. Also, we've already discussed this, but don't take whatever profit you did manage to secure for granted. People kind of scoff at all these little $30, $50 gains and refuse to take it. And they're like, oh, Mr. XXX on social media made $5,000. I'm not going to take this bullshit $30. And then they don't take it, right? And then what happens is that $30 turns into a negative $100, right? So don't scoff at whatever profits you get. Holding out, believing more green will come, and then it just reverses on you, right? So don't forget that these little gains will add up. Let's just say quickly, if you do $50 a day consistently, every single week for an entire month, that's another $1,000 that you didn't have before. These little gains will add up, right? $1,000 extra dollars. This goes to your bills. This goes to your food. Like this stuff will add up. So don't scoff at it the next time you see even $20, right? It's still money that you made from your computer chair, right? You're in the comfortability of your own home. You're not doing anything besides clicking buttons. So, $20 is not too bad, right? So kind of just different words to kind of keep in mind the next time you're reviewing your trade. Try not to think about the hindsight words. Try to focus on the future and the next trade, right? So try to focus on, obviously you want to recap your trades and see what you could potentially improve on, but don't just sit there, oh crap, I just took profit here and then AMD just soared $10. Well, yeah, it did, but what can you do potentially next time to not, paper hand so quickly, so you're able to secure more gains? So don't just like dwell on and bitch about, oh, I sold here for barely any gains. Okay, try to take the initiative and figure out why you sold that. Were you getting fearful? Were you like, what was your reasoning on why you sold this? So then next time you see the exact same situation set up happen, you'll know, okay, well, last time I did this, maybe this time I can do something differently, so I'm able to potentially, hold out for a little bit longer. Because most of these setups that you see every single day and every single week of trading pretty much happen very often. So if you're able to identify a couple of these specific scenarios, and then the next time you see them, you're already accustomed to them. So you just need to identify these specific scenarios and then kind of journal and back test them. And then when you see them next, you're able to capitalize them and hold them longer, right? So that's how to take a loss like a champion. Next, we're going to talk about risk management. So risk management. Correct risk management is extremely, extremely important when trading. People often tell you trading is gambling. Trading is not gambling. It can be gambling if you have no idea what you're doing, but you want to treat it as a business. You want to treat your trading as a business, and your mindset will change, because just as a business, if your corporation, if your business goes to $0, you're bankrupt, right? Same exact mentality with actual trading accounts. You don't want to have your business go in the red. You don't want to be zero, right? So you always want to try to be profitable. Now, I kind of gave some risk management uh, scenarios for different account sizes, because I'm not sure if you guys are under 1K or 50K, who really knows, but just some general rule of thumb is to not risk more than 30% of your account per trade, right? Now, everyone's risk tolerance is completely different, but at the absolute max, I would pretty much say 40% per any trade, right? Now, this becomes less, when you start having a bigger account. Like, there's no way or reason why you should be risking 40% of your $50,000 account. Like, that's just horrible, right? So as you can kind of see here, your risk becomes, more and smaller as you start to gradually gain your account size, because you don't need to be risking, half of your account size just for one specific trade, nor do you want to, because let's just say you risk half of your account size on two specific trades, right? And then you took two losses on those trades. And then let's just say, 25% stop loss on each of those two losers. You literally just lost 50% of your account in one day, right? So kind of think about that. You want to have correct risk management. And also, I know you guys probably see a lot of different analysis and a lot of different signals every day, and lots of people trading different stocks. If you can't afford a specific stock someone's calling out, don't force yourself to do it. Because, like, say for example, let's just say I'm on a $3,000 account, right? And XYZ is calling out Amazon and Tesla. Why would you trade that? Your account cannot handle Tesla or Amazon. Like, you can't be forcing that, or you're just going to blow your account, right? So you have to be trading things that are aligned with your specific account. If you're on, under $5,000 account, you need to be trading stocks that are preferably under $750 a pop, right? So then that's when you kind of do your criteria and try to search for different, stocks and sectors and contracts that are under $750 a pop, right? So this way, then you can kind of create a watch list of maybe 10, 20 stocks that you think would be good trades. Obviously, they have to have, volume and tight spreads, but we'll get into on another day. But the moral of the story is, if you cannot afford a contract, move on to a contract that you can afford. Move on to a stock that you can afford, because the amount of DMs that I get on a weekly basis of saying, hey, I'm on a $5,000 account. I'm playing Amazon $100 out of the money. Why am I losing? Probably because you can't afford that, and you're playing so far out of the money and you're getting pooped on. Like, you have to play with contracts that are aligning with your size, like with your specific account size, right? So kind of just keep that in mind. A lot of people don't really necessarily think about that. They're like, oh, I'm just going to spend, a lot of money on the specific contract. I'll just go out of the money. No big deal. Nah, especially if you're day trading, you really don't want to go out of the money very far. You ideally want to be staying in the money or at the money, maybe one strike out. So if you can't afford any of those contracts, then find a different one. That's pretty much it. You if you can't afford any of those three strikes, just find a different one that you can afford, because trust me, there are tons and tons and tons of different stocks that you can afford, but you're just not looking for them. So that's one. So then kind of an example of just two different examples of risk management. So now obviously these are just examples. You wouldn't necessarily be trading all these different opportunities. It's just kind of showcasing, as long as you keep your losers less than your winners, then you will be profitable. So you need to have a realistic weekly or daily profit goal in mind. So let me kind of break these down. So let's just say you're on a $1,000 account. Okay. So let's just say if my stop losses are either 20 or 25%, and I would have 3 opportunities per day to trade, because 3, 30%, there's 3 trades. Okay. So let's just say I have 1 losing trade, and depending on if you want a 20% stop loss or 25% stop loss, I gave you 2 scenarios, right? So ideally, when growing an account, if you're under $1,000 especially, you want to keep your losses preferably under $100 per day. So ideally $50 per day. So like anywhere from $50 to $100. If you lose all your trades that day, stop at 100 and then just come back tomorrow, because at the rate you're going to be snowballing and revenge trading. So stop if you get to $100 loss that specific day. So that's 1 losing trade, but you still have 2 other opportunities. Okay. So let's just say you have 2 20% winning trades. All right. So then when you subtract everything, you'd either get anywhere from $45 to about $65 per day, depending on, commissions, fees, all that stuff. So all you care about when growing is compounding 2% daily, which in this case for $1,000 account would be $20, right? It seems very minuscule at first, but that 2% will add up very quickly if you do it every single day, right? In this example, actually, you're exceeding your 2% goal and getting about anywhere from 5 to 6%, right? So you're actually exceeding your goal by 3 times. So this is very good, right? So don't scoff at these profits, because you have to be realistic with your goal, right? You have to be realistic with your weekly or daily profit goal in mind, because let's just say, since we're on the $1,000 account, there is no way in hell you're about to make a couple $100 or a couple $1,000 every single day on your account. I'm sorry to burst your bubble, you're just not going to do it, right? Unless you're getting super, super lucky, maybe 1 time out of a month, sure. But consistently, you're not going to do it. I'm sorry to say, you need more size to do that type of stuff. So slow and steady wins the race, right? Often a very common misconception that I've heard is pretty much, I need to have a good win-loss ratio or I will not be profitable. That is not true, right? So kind of a fun fact. Write this one down too. All you need is 30% win-loss ratio to actually be profitable. Let me repeat myself. You only need 30%. So if you have 10 trades and you lose 7 of them, you only need 3 winners. Okay. So as long as your wins outweigh your losses, you will be profitable. So if you see your trade going south and it's not working out to you in your way, just cut it and move on. Don't hold that. Don't bag hold it. Don't continue to bleed. Just identify that this is a losing trade. Let me continue forward, because I know I have more trade opportunities every single time, right? So just try not to think about that. Oh, I need to have 70. I need to have 90. I need to have 100% ratio. No, you don't. You need 30%. That's all you need to strive for. And then another fun fact, most hedge funds only have about 30 to 50% win ratio too. So like these professional traders have less than a 50% win loss ratio, right? So don't be thinking you need 190% or any of that stuff. You need 30% to win loss ratios to be profitable. So just kind of understand that. So then let's break down a $10,000 account example. So now this one's also just an example. You don't necessarily have to take 10 specific trades every single day. This is just a sheer example. So let's just say you have 5 losing trades at 20% stop loss. So you're losing $1,000 right there, right? But then you actually have 5 winning trades of 25% profit. So then you subtract everything, you get $250 profit, right? So this actually still exceeds your 2% compounding goal. And if you do this consistently, just 3 days a week, you just made $3,000, right? So this basically pays a fair bit of your bills from just doing this 3 days a week, right? So this 2% that might sound like crap up here for $20 is pretty gosh darn good for a 10K account, right? So 2% does add up and compound once you start growing, right? So trading is a stepping stone game. Those $50 days will turn into $250 days soon, and then $500 days, and then $1,000 days. It's literally just a stepping stone process. It's kind of like the way I like to talk about it, it's kind of like a video game, right? You start at beginning levels, you're kind of just, noob with no gear, no armor, none of that stuff. But then you come into the end game and you have all this different gear, you have all the experience, you have the levels, and that's when you start making the actual real money, right? So as long as you have the groundwork and the fundamentals at the base level, and you're able to consistently make this smaller change, then you're able to kind of gradually size up when your account gets larger to make even more money, because you don't want to rush the process. Because let me kind of take a step back. If you cannot handle trading with small account sizes, such as like $1,000, $5,000, and anything like that, what makes you think you're going to be trading with 50K? Right? What makes you think you can handle it if you can't handle this? Because the exact same thing, it's all the same. All the fundamentals are the same. All the analysis is the same. Everything is the same. The only thing that changes, instead of buying one contract, you buy 10 or you buy 100. That's the only thing. You change a literal number in your contract buying. Everything else is the same. So don't rush the process and think about money, because if you can't do this right now at $1,000 account, you're not going to be able to do it 100K, right? I'm sorry to say, you have to understand the groundwork, the fundamentals, the analysis, how the market moves, why the market moves, all your ins and outs of contracts, pretty much all the groundwork. Because if you don't know that, and you just start out trading with a $50,000 account, you're going to blow $50,000. And then you're going to be really pissed. Be like, oh, fuck, I just blew 50K. Yeah, you did, because you rushed the process. So try to start off small. Challenge yourself. Start off with $1,000 account. Start off with a $500 account, whatever it is. Prove to yourself that you can do it. Prove to yourself. So if you're thinking to yourself, if you're a new trader and you're like, I got 10 grand to blow. No, you don't. You're going to save that $9,000. You're going to put it in long-term investments. Now you're going to put $1,000 into your trading account, and you're going to prove to yourself that you can do it. If you can't prove to yourself over a month or two, then you don't deserve to trade with $10,000. You're just going to blow it. So you have to be consistent and prove to yourself each and every month that, yes, I can be a profitable trader. Then that's when you size up. Any questions about that? Well, that's my lesson for today, boys. Do you guys have any questions, anything you want to talk about before we end our session today?
Ask some questions, guys. Don't miss the opportunity to ask your questions. Great lesson, Scrub.
Thank you. Well, I appreciate you guys for listening. Also, I think you guys can see my screen. Here is this. If you want a copy of this to put on your desk, anywhere in your house, feel free to let me know. I'll send it over to you. Basically, what you want to do is just print it out and just keep it by your desk. It's pretty much just like a checklist, your psychological checklist, right? And also, let me know what you would like to see for next week. I'll write up a nice little session for you guys. Just let me know. And also, if you didn't see, I create these every single week. So I create newsletters every single week, every Sunday, and I have a 93% accuracy. So if you'd like to check that out, send me a DM as well. But anyway, I appreciate you guys for listening. Thank you so much. And I really hope you have a great rest of your day. Send me a DM about the tax thing. I'll get back to you on that one personally. But anyway, thank you again, guys. Enjoy the rest of your day. Enjoy your lunch. Thank you again.
Awesome. Thanks, Scrub. I hope you guys learned something. Definitely some gems dropped there. So I'll say again, we got a 50% off lifetime sale going on. Just use the code TikTok50 and you'll get 50% off the $750 lifetime package. It breaks it down to only $375. So great deal. All right, guys. Back to the market. Let me stop that recording.